Hello traders, you are welcome back to this channel. In this video, we are going to be diving into a game-changing indicator that helps spot trend reversals and breakout opportunities. Now, the indicator we are going to be discussing is the Bill Williams Fractals Indicator. So I am going to add the indicator to the chart right now. Okay, is the Bill Williams Fractal Indicator. All right. Now, if you have ever struggled to identify the best entry and exit points, or if you have missed out on major market moves, then this video is for you. By the end of this video, you will know exactly how to use Bill Williams fractals to improve your trading. So stick around and let us get started. First of all, let us break down what Bill Williams fractals are and why they matter. Developed by legendary trader Bill Williams, this indicator highlights swing highs and swing lows in the market. These fractals form when price action shows a pattern of 5 consecutive candles, with the middle candle acting as a pivot point. So here is how it works, okay? For a bullish fractal, which represents a buy signal, it forms when the middle candle has 2 higher lows on both sides, right? As you can see, 2 higher lows on both sides, indicating a potential uptrend. You can see here again, 2 higher lows on both sides, here again, 2 higher lows on both sides, here again, 2 higher lows on both sides. So that is the principle that is used to give the buy signal. You can see here again, and so on. All right. Then for a bearish fractal, which indicates a sell signal, it forms when the middle candle has 2 lower highs on both sides, 2 lower highs on both sides, 2 lower highs on both sides, as you can see, and so on and so forth. So it signals a possible downtrend, okay? Now that we understand what fractals are, let us talk about how to use them in actual trading. By themselves, fractals can be useful for spotting market turning points, but the real power comes when you combine them with other indicators like the Alligator indicator. You know, it's another tool developed by Bill Williams that helps confirm trend direction. Let's just take a sneak peek into that indicator real quick. Okay, this is the Alligator indicator. It's quite an effective indicator as well. So this is one of the indicators that you can actually decide to combine with the fractals. Okay, it doesn't mean that you must combine with the fractals, right? It doesn't mean that that it's not a necessity, right? It's just if you are looking for extra confirmation, this is one of a nice indicator that you can actually confirm with the fractals. This indicator is a trend following indicator, the Alligator indicator, right? And you can also combine. You can see this indicator gives signals based on crossovers. You see, when you have a crossover, it's bullish crossover, it confirms a buy signal. We have a bearish crossover, it confirms a sell signal. You can also combine, the fractals with moving averages, okay, to identify the overall market trend. You can also combine with Fibonacci retracement, to find strong support and resistance levels, and so on. Okay, the list goes on and on. Now, how do you trade with fractals? Let me just leave all the fractal indicator on the chart right now. How do you trade only with fractals? You use bullish fractals to spot potential buy opportunities at market bottoms. All right, at market bottoms is when you find the bullish fractals, right? And you use them to find potential buy opportunities. Then you use bearish fractals to spot sell opportunities at market tops. All right, at market tops is where you use the bearish fractals to spot potential sell opportunities. All right, always combine fractals with other indicators to increase your accuracy. It is also important. Now, let us talk about common mistakes that traders make when using fractals and how you can avoid them. The first mistake is trading every fractal. Now, not every fractal means a strong reversal. Obviously, we can see that from this chart. You can see that there are some fractals here that, in fact, it was just a consolidation. This period now, you can see that this was a period of consolidation. But the fractals are going to keep forming because there is a principle behind it. There's a principle behind the formation. When you have lower highs on both sides, you get a bearish fractal. When you have higher lows on both sides, you get a bullish fractal. So even in a consolidation period, you're still going to find your fractals forming, but it doesn't mean that those fractals are indicating reversals. They're just strong reversals, I mean, but they're forming because a bearish move is coming in. That's why the bearish fractal is going to form, and a bullish fractal is going to form because a bullish move is coming in, but it's not going to tell you how long that bullish move is going to be or how long that bearish move is going to be. So if you are trading in a consolidation market, you have to be cautious. All right, but if it is a trending market, perhaps a breakout has occurred, then you can expect a longer move. All right, so if you want a longer move, if you want high probability trades, then you can just stay away from fractals that form within consolidation zones. All right, now another mistake is ignoring market structure. Fractals work best when aligned with support and resistance zones or trend lines. Okay, it's very important, so take note of that. And then another mistake is not using a stop loss. Even strong setups can fail. So always place a stop loss to manage your risk effectively. Okay, so let us just quickly recap what we covered today. The Bill Williams fractals help identify potential market reversals. All right, bullish fractals signal possible buy opportunities and they form below the candlesticks, while bearish fractals signal sell opportunities and they form above the candlesticks. Okay, for the best results, you can combine fractals with other indicators. Examples include Alligator, moving averages, Fibonacci retracement, etc. All right, now it's also important that you avoid common mistakes like trading every fractal signal without confirmation. By using these techniques, you can improve your ability to spot high quality trade setups and avoid unnecessary risks. And talking about risks, ensure that you do not trade with an amount that you cannot afford to lose. Ensure that you do not over leverage. Okay, and make sure that you use good risk to reward ratio. It is also very, very important. For example, if you are risking $1, you should be targeting at least $2 in profit. Okay, so that even if you have equal number of wins and losses, you're still going to be on the winning side. Imagine if you lost 3 trades and you won 3 trades consecutively. Now, if you are risking $1 per trade and you are making $2, when you win you make 2, when you lose 1. You will notice that even if you win 3, that is, you have won $6, and if you lose 3, you have lost $3. At the end of the day, you are still in a profit of $3. So that's the reason why it's good to have risk to reward ratio of 1:2 minimum. That is, you are making times 2 of what you are risking. That's the reason why it's good to have such risk to reward ratio. Okay, so if you found this video helpful, smash that like button and subscribe for more in-depth trading strategies. Comment below and let me know, have you used Bill Williams fractals in your trading? If so, what is your experience been like? Thank you for watching, and I hope to see you in the next video. Happy trading.